everyone. Welcome to another episode of the Aftershock, where we're giving you the latest and greatest in all things Web3. Your host here, Richard Carthon, and I'm excited to share some of the latest news that is coming through the airways this week. Now, if you're over on our podcast, hope you enjoy the content. Please make sure to leave us a nice comment and share out with other people listening. And for those over on our YouTube channel, please make sure to like and subscribe and leave some comments on some other types of news and information that you want us to be covering in the future. So thank you so much for joining us. And without further ado, let's go ahead and jump into this week's Aftershock.
The Aftershock.
So for this week, our first story is looking at Burger King and how in Paris, they are now accepting Bitcoin and crypto payments. So the international fast food giant Burger King announced its Instapower power bank rental machines that accept cryptocurrency payments at its Paris locations. The machines are connected to crypto payment services, Alchemy Pay, and Binance Pay. Along with Binance Pay and Alchemy Pay, Instapower is industry-leading power bank charging service now accepts cryptocurrency payments and assets such as Bitcoin from its customers over 14,000 sites across the globe. And this is really cool as we're starting to see more and more of these larger institutions prepare the way to accept cryptocurrency payments. So I think this will be a really good use case study in Paris for Burger King to see how many people are willing to spend some of their Bitcoin towards this. And if it goes well, we could see this start to expand across other locations throughout the globe. So I think this will be a case study that if done well, or if there's success, we will see expansion across more locations. Our second story is looking at Arbitrum as it airdrops had over 1,500 addresses and 3.3 million sent into wallets. So the on-chain activity showed that the airdrop 100 consolidated tokens worth about 3.3 million collectively from about 1,500 wallets into 2 wallets. According to the blockchain analysis from Look On Chain, one wallet received 1.4 million of ARB from 866 addresses. The account added all the ARB received to the decentralized exchange Uniswap to provide liquidity. The 1.4 million ARB tokens are worth about 2 million at the time of the writing. And then the other one received about 933,000 ARB from 630 addresses, which was 1.38 million. So a lot of people in response to this airdrop for Arbitrum did everything possible to try to help themselves be able to receive some of this. And unfortunately, one of the risks of doing airdrops like this is that people try to game the system. So I think this is going to be looking into this a little bit more. But again, this has created its own niche of types of people who seeking these type of opportunities to get as much money from airdrops as possible. The third article is going to look at G7 nations that are calling for stricter oversight of cryptocurrency markets. The group of seven G7 major industrial democracies are reportedly planning to promote tougher regulations of cryptocurrency sector during the 49th G7 summit, which is scheduled for May 2023. It will take place in Hiroshima, Japan. The goal of the plan is to increase transparency and consumer protections, according to anonymous officials with the knowledge of the plan. The move comes across in the wake of concerns about potential risks to global financial systems posed by crypto assets, with the collapse of FTX exposed the poor governance of the industry and sent shockwaves to the financial markets. So if there's one thing clear from 2022 that's going to be effective in 2023 is regulation. We're going to see a lot more of it. Regulation, I don't necessarily see as overall as a bad thing. I think it actually helps us move forward in the right direction. However, over-regulation and depending on what is put out there could be damaging in the long run. Regulations here, it's going to continue. And I think the faster we can get to a more productive conversation around this and clear guidelines put in place, the better it is overall for the industry. The fourth article is looking at First Citizens Bank, which is snapping up Silicon Valley Bank, and its branches opened up Monday as of March 27th. So the deal was announced on March 26th by the FDIC, which is the Federal Deposit Insurance Corporation. And the North Carolina-based First Citizens Bank is set to acquire all the deposits and loans of SVB, which is Silicon Valley Bank. And the purchase and assumption agreement, 17 former branches of Silicon Valley Bank will open as First Citizens Bank and Trust Company on the 27th. And depositors will automatically become depositors of First Citizens Bank. So this is one of those examples of the FDIC coming in, going to work, and getting stuff done very quickly. And this is one of the pluses of the traditional finance markets of having safeguards in place to help stop collapses as they come about. What we saw last year in the crypto markets between Terra Luna crash and several others was that there's nothing in place to stop it as things went down. So I think what is great about the next potential bull market wave that we see to occur in the cryptocurrency markets is that it's going to be built from the lessons of the failures of the past so that they can't be repeated in the same way. So all that to say is that the crypto markets are going to get smarter because they have to, and more safeguards are going to be put in place so that future people that participate in this market do not have to go through the same growing pains as people earlier in the market. Next, we're looking at the US as it seizes 18 crypto ATMs purchased using fraudulent SBA loans. So the way that this worked is that 18 crypto ATMs were purchased from the Small Business Administration meant to assist small business financially harmed by COVID-19 pandemic. The loans were also used to purchase Bitcoin from New York-based cryptocurrency exchange. It's called CoinDogs Crypto ATMs, and they were seized. And they've been arrested for charges in connections with the scheme to steal and launder over $100 million in fraudulently obtained loans from the SBA, including the use of fraud proceeds to purchase crypto ATMs. So when the SBA loans came out during COVID, people saw this as an opportunity. And some people did this in a fraudulent way. And one of the ways that someone did this was buying crypto ATMs. Flew on the radar for a moment, but it catches back up. The government does their checks and eventually will catch up with you if you're doing something at that scale of such fraud. So, AKA, one, the SBA loans were meant to really help struggling business when everything shut down. So this was money that was taken away from another potential business that could have used those funds to sustain. Don't have a lot of empathy. Sounds like justice is being served in this moment. So again, if you're going to commit, don't commit fraud. First and foremost, don't commit fraud. And I'll leave it there. Our next article, we're going to be looking at Coinbase as it wants devs to build inflation-pegged flat coins on its new Base network. Coinbase explained that it's now more important than ever to build an inflation tracking stablecoin that negates poor monetary policy decisions of central banks. The crypto exchange Coinbase sees inflation-pegged flat coins as one of 4 critical innovations that could be built on its recently launched Layer 2 network Base. The other 3 include an on-chain reputation system, an on-chain limit order book, LOB, exchange, and tools that make decentralized finance ecosystems safer. So I think as they try to build out these 4 critical areas of innovation, I do think it is going to help the overall market. A lot of what was listed are things that are going to further the crypto space and needs to have a lot more safeguards in place as we evolve. So I think this is pretty cool, and I think it's going to be good to see more people who are building into this ecosystem have this guidance and direction to be headed. Our final Amazon is looking at Amazon as its NFT plans were teased in a receipt mailed out to people on this past Friday. An email to CoinDesk, Niklesh D. Amazon appeared to confirm that the digital tokens, NFT gallery, and resale opportunities are coming to the site. The confirmation was sent after Amazon Prime Video channel subscription was renewed automatically. Had not purchased an NFT token from Amazon, did not have any prior knowledge of the platform's integration of NFTs. It provided a couple insights into Amazon's plans for Web3 expansion and hints at where these tools are going to be live on the platform. So, Amazon entering the NFT space. You want to talk about a huge validation for NFTs are here to stay. and are going to continue to grow. This is a big one. If Amazon's attacking it, then you know there's got to be teeth on this. And if they're creating a product, they're definitely putting things in place to try to incentivize one of the largest marketplaces in existence. So I'm going to keep watching this closely. And I think they're going to come in and immediately be a high impact player, just like we saw with Reddit as they created their NFT marketplace. So that's going to wrap up this week's Web3 Lightning Round. So I want to thank you for joining us again for this week's Aftershock. Again, if you liked all of the information, please make sure to give us a like, leave us a comment, make sure to subscribe, and share this out with someone who you think might enjoy. We appreciate you joining us. And as always, we hope you stay cryptocurrent.